I'm being patient. Still spinning things. Get that side. Typically it's faster than this. Okay, so as you can see, I've got my micro Bitcoins here. Got the order committed. I now have an order ID. If I go over to my Bitcoin tab, I now have a record here that's a payment request. You can see that it's been requested. I know the exchange rate. In this implementation, we actually went out and got the latest prices. And at that point in time, it was 122.80 in this implementation. That would be a choice for the organization. They can use their internal rate tables, or they might go get spot rates, say. Let's go now from the customer's perspective. We now have a payment request that's arrived. You see this has just arrived. So now I'm the customer, right? And now I need to pay for goods and services. So here we have an email, which is a request for payment. You can see that this was the invoice. We're asking for this many micro Bitcoins, right? And here's the address. So let's go do that. I got my wallet. I'm in the test mode here. I like to always grab this label over here, which is descriptive. And I see right here it's saying send 1 Bitcoin. Set that up. Okay. Hit send. Great. Now, the next part of this I kind of call Bitcoin transaction coordination, because we don't want to ship good until we know the monies have been received, right? So what we would be doing here, that the organization would do, is if we go to our Bitcoin payment request, let's have a look at that. This was what was initiated. We can see what we're doing is a capture. So a modern financial system, we could go capture, receive Bitcoin, but there's no reason why we have to pay. Once you have Bitcoin, why not pay your bills? This implementation actually can pay bills with Bitcoin. Here was the invoice. This was the amount we're asking for. Here's the QR code. Now, at this point in time, blockchain, we don't know the transaction. Let's go ahead and get status. There we go. Status now has changed to unconfirmed. We now have a transaction ID. Bitcoin, or micro Bitcoin in this case, are on their way. The organization can set up rules upon what are the different statuses they want to have in terms of how many blockchains that they want to have confirmations and so forth. The idea is once the Bitcoin has been received, then it's safe to ship the good. So we don't have the time to wait for that Bitcoin to arrive. So let's go look at another transaction that has already been received. You know what, I did one last night, which is right, you'll see unconfirmed. Let's go into that, because I know the Bitcoin should have finally arrived since last night. So let's just get the request. Right now it's unconfirmed, so this is a different transaction I did last night. Now normally this would run in the background for an organization, and they would use the status to indicate whether the Bitcoins have arrived, and they would run their operations in their warehouse to be able to know it's safe to ship, right? Indeed, look, it has been sent. Now, some other things that are important here that have happened. Now we have some accounting to do. Money has arrived. So if you look over here, our initiating transaction was an invoice, which was the request for payment. But now that the money's arrived, we have a concluding transaction. This is effectively the accounting for for the Bitcoin that has arrived. And so we're essentially saying the money's been deposited because we're treating the Bitcoin like a bank account. Let me show you for all the accountants out there, let me show you what the debits and credits look like, because that's for me where it always really hits home. If you look at the GL impact of this, this is the first opportunity for you to observe something interesting. Notice that the presentation in the general ledger is in USD, but we transacted in Bitcoin. The modern financial system basically presents information in your base currency, while at the same time it's holding the fact that you did things in a different currency. We didn't convert the dollars, right? There was nothing here that did conversion. We are holding Bitcoin. But for this transaction, at that point in time, at the price we did it, it was worth purchasing power of $123.25. That's what has you, as a business owner, be able to make the proper assessment around the economic performance of your trade. Okay, so I showed the order management. I showed you some accounting. Now what we can do is run a financial statement. So we'll do a balance sheet, which is basically where we're holding our Bitcoin in terms of its balance. What I want you to focus on is this one right here. Effectively, this was the wallet that I directed the funds to. A merchant may have multiple wallets for different purposes, right? Each one of them having a particular general ledger account. Here it's saying it's $895.64 or 7.8 Bitcoin, which should match up to what their wallet balance is. Now, most of you might say, wait a minute, now, is that the price of, the current price of a Bitcoin times the current price of Bitcoin times the number of Bitcoins that we have, or micro Bitcoins really here, is $895.64? No. What this is a culmination of all the transactions that you did at different prices. And now what we have is, okay, we have the opportunity for something called currency gains or losses through revaluation, which is a normal concept because prices do change, right? And you need to be able to recognize that. So a modern financial system allows for that. So what we do, we run a function called revalue